So today we are going to start our lovely discussion on some few amendments which were made by the National Assembly regarding the public regulation. That is a part of corporate governance. I'll recite on some few issues which affect the corporate governance that form part of financial reporting in the public sector, specifically on the internal audit. So I will start narrating some of the key issues. This act was released on 30 September 2024. So its government notes is 798, which was published on 13 September 2024. So this is regarding the amendment on CAP 348. So having discussed this kind of changes, is possibly accountant, internal auditors, and also the head of finance should be aware on what are the key issues to take into account so that you can amend the structure content of financial statements. And even during the auditing, the supreme auditor may concentrate on this kind of regulation. So this regulation actually started with the following definition of terms. So there are some terms has been described thoroughly in this regulation so that it's well defined. And it is from this terminology and definition we are supposed to pick and amend our accounting manual, because the accounting manual should contain definition of terms according to law. The first definition that has been documented with law is a definition of an independence of internal audit service. So we'll be discussing, so if somebody is preparing the audit charter, for example, the first step is to refer the term independence of internal audit service as a key issue. So that has the following meaning. I say that the independence of internal audit, according to this regulation, means that the freedom from conditions that strengthen the ability of internal audit services to carry out internal audit responsibilities in an unbiased manner. So the independence is explaining that there are threats to independence for internal auditors which persist for more than years. We all know that the internal auditor in the public sector is subjected to some threats. For example, the internal auditor is still reporting the accounting officer. Till on 2010, when the position of internal auditor general was established by law, so that the internal auditor can report to the internal auditor general. Formerly, they were reporting to the accounting officer, and that one increases the threats. So this independence, this new definition is aimed at trying to give up as a wake-up call that the independence of internal auditor has now come to in practice, that an internal auditor should be free from the threats as has been described here. Number two is internal auditor. So we should have independence of internal audit. That one is talking about independence, and perhaps internal audit may mean the department all the units, etc. Now, who is an internal auditor in Tanzania? So we have some definition from several countries, several observations, several regulatory bodies worldwide. But now in Tanzania, who is an internal auditor so far? They say that an internal auditor means a trained professional. So there must be somebody training internal auditor in the public sector. Now in Tanzania, where do we train our internal auditor? According to rules in Tanzania, the only thing here is that perhaps the regulatory authority to train accountants lie in the hands of NBA. So NBA is the one who can train the internal auditor and the other related bodies such as SA, etc. But Tanzania, NBA. So internal auditor is a trained professional engaged by public sector entity to undertake internal audit responsibilities within the internal audit service. Now, is an internal auditor an accountant? That's the first question. When we acquire our CPA, we all know that certified public accountants, we are accountants, and in some cases, there are very few issues in CPA we can accommodate in public sector. For example, we can congratulate NBA of having established the diploma in IPSAS, which is well centered to public sector per se. Now, do we have any other course within a nation that depicts the essence of having a knowledge in the public sector internal audit? So an internal auditor now must be well-trained professional in the public sector. So we are expecting that an internal auditor should handle matter relating to public sector, not private sector. The internal auditor is expected to note some issues relating to international public sector accounting standard IPSAS and internal rules regarding the work of public sector. So from this definition, an internal auditor is a well-trained professional who is engaged by public sector entity to undertake internal audit responsibility within internal audit services. That's the definition. Let's continue. Now, what is internal audit service? Again, what is internal audit service? So the internal audit service, again, this one is a department. This one is a department or division. So it's still a department or division. Department or division. And that's why a public sector must have a division of internal audit. So the internal audit service means a department, division, team of consultants. So you can see the internal audit department should have a team of consultants or other practitioners which undertake internal audit. So within the internal audit services, we are expecting to have expertise. For example, in the Ministry of Mining, we should have geologists who are dealing with internal audit, at least expertise on how to handle it. For the EULA, we need to have the expert in engineering or petrochemical engineering who can perform the activity of internal auditing within the entities. So internal auditing, it is enhanced by having somebody who is a consultant, somebody who is a professional in the area of specialization, in the area where the entity is operating. So similarly to all other departments. So the service, the unit is a composite of a team. So here we can see an internal auditor is a person who is professional in internal audit, but it requires to have other professional experts in the same industries so that some key issues can be well observed according to the professional requirements. Then you have internal control. This is now simple. Means the policies, procedure, processes, system, design, and affected by legislation. So the internal control system must be supported. Number one, must be designed. Number two, the design must be supported by legislation of the authority. And then it must be managed to provide reasonable assurance on reliability of financial records, accounting information, reporting, and improve efficiency of public sector. See, so that's number one. We are still going on with this definition of terms as per this document. Now, number two is risk management. Now, risk management has been included as a law passed by the National Assembly. Previously, we have risk management guideline issued by Treasury. Now, the risk management has been documented officially and enacted by the National Assembly. So, what is risk management so far? Part of corporate governance, risk management means management, policy, procedure, practice for identifying, number one, analyzing, number two, assessing, number three, treating, number four, monitoring, number five, and number six, reporting. So the risk management has these 6 elements. Number one, the internal auditor we see next that has a role to audit the risk management. So the internal auditor will now concentrate how the risk has been identified, how the risk has been analyzed, how the risk has been assessed, how the risk has been treated, monitored, and reporting. Similarly, the Supreme Auditor, National Audit, will observe and require the reports regarding risk management in the public sector to see if the internal auditor has documented anything so that he can come up with the observation. Now, formally, we have this one here. Risk management is something very complex, but it requires minimum attention. So, as you see this diagram here, the board, the goals, the risk tolerance. First, starts with management. Management will impose strategies, and those strategies you must assess risk and see whether they have been exposed. So this one I can't go into the details, but the main issue here is the risk management starts from establishment of infrastructure. Number two, you start identifying the risk. Number three, you have to measure it, quantify, and then you have to monitor it and report. Those key issues has been documented in this regulation so that professionally we should have somewhere to start. Otherwise, the thing we're not moving in a proper as per previous observation. Now let's go to other issues as directed here. The second definition, the second key issue, the law has identified the following. Number one, Regulation 28 of Public Finance Act and 29 of the same has been replaced to make 28. So 28 and 29 has been merged together. That one is now telling us about establishment of internal audit services. So if you were preparing financial statements and referring the section 28, so you have to merge this to refer 28 which has been made from 29. So this section 28, the new section, the new regulation refers to establishment of internal audit in public sector. Now, what does this dictate? Let us see it. Regulation 28, the new issued regulation with GN 798, is now telling us the establishment of internal audit services. So here it explains that it is a work of accounting officer. To do what? Number one, to ensure that the attainment of value for money and improve public sector entity operations. Number two, accomplishment of public sector entity objectives by bringing the system, discipline, approach to evaluate and improve the effectiveness of risk management. Now you see here, he has added this one here. So as you go for internal audits, then he's saying that we need to improve the risk management. Number one, the control. Number two, the governance process. And then accounting officer shall establish internal audit service for which he is responsible. So you see, this regulation is explaining the reasons as to why the accounting officer has to establish the strong internal audit unit. That is regulation 28, which has been made from regulation 29. Let's proceed. Reporting structure of internal audit services. Number one, I told you about establishment of internal audit services. Number two, now we're going to reporting structure. How should the audit service report? Now, regulation 28, subsection 2, it has pursued with two issues very strong. It says that the internal audit services shall report administratively to accounting officer and functionally to the audit committee. So now, this is very open that administratively the internal audit service is reporting to the accounting officer. Functionally, it is reporting to the audit committee. This kind of demarcation has been established in order to make or improve the independence of internal audit. Now, the regulation has demarcated what are the issues to report to the accounting officer administratively and what are the issues that the internal auditor has to report to the audit committee functionally. I will put them through the requirements as here under. So let's continue here. Regulation 29 is telling us about the responsibility of internal audit services. So if we want to design the audit charter, number one, you should be able to discuss what are the responsibility of internal audit services. Number one, it has been depicted here. Responsibilities. So this is regulation 59, subsection 1. Number one, to review reports. You review report on proper over receipt, custody, and utilization of resources for public sector entity. Number two, review reports on conformity with financial and operational procedure right down in any legislation or regulation, instruction for control over the revenue and expenditure of public sector. So the internal audit is responsible for custody. Number two, report and review on conformity with financial operational review. Number three, the internal auditor is there to correct classification, allocation, utilization of revenue and expenditure. For if the project funds are not utilized according to its allocation, it is a work of internal auditor to document this report. For example, we have donor fund projects, we have other funds through which the county officer is disbursing through its board. The way the disbursements are made shall conform to the requirement by those regulations which empower the release of those funds. Number D, review and report on the reliability and integrity of financial and operating data used for preparation of financial statements. Now, this law here, this requirement here, is now very sensitive. This one is what links the role of internal audit in preparation of financial statements. There are some figures which appear in financial statements, for example, depreciation, impairment, selection of useful life, whatever the case may be. Those information is always documented by the accountant. Now, from this requirement, it is clearly indicating that the internal auditor has to audit to see the integrity of depreciation amount which has been charged in financial statement. The integrity, its liability, its clearance. You can see some financial statements have depreciation which conflicts with useful life. So in that way, it's a problem that the internal auditor has to audit the report before submitting to audit committee for discussion. So this requirement requires a strong budget for the internal auditors to go for training, to note and review some past financial statements for previous year, because currently you can see many public sector have asset which reads zero when it's still in use. This was saying fully depreciated assets. Now the reliability and integrity of those assets is the problem. So with this kind of duty, it's now a law for internal auditor to monitor the integrity of financial statement to see that you minimize audit queries, you minimize errors, you minimize repetitive, you conform to IPSA's requirements and the other directive from treasurers. Number E, it is a work of internal auditor to review and report on the system in place for safeguarding assets and where necessary, verify the existence of such asset, stock taking of some asset, for example, motor vehicle and other similar. Review and report on special audit. So now it is a work for internal auditor on special audit regarding value for money, performance, information security, data protection, and cyber security or forensic. Let's move. Number G, internal auditor should review and report on operation or program to ascertain whether the results are consistent with established objectives and goals. So the internal auditor has to review the strategic plan and see if it is in line with what has been highmarked. Number H, the internal auditor is there to review and report on the adequacy of actions by management to internal and external audit reports, CAD, and follow up the implementations of audit recommendations. Now here is something very crucial. Always in every year, the CAG is presenting his or her report to the public. And every public sector has to deal with some recommendation issued by the CAG. Now, it is the work of internal auditor to make sure that all recommendation made by the CAG has to follow its implementation as per requirements. Number I, the internal auditor has to review and report on the adequacy and effectiveness of controls within its public sector. Now, controls has been specifically documented that computerized controls, for example, people who are running GAMIS, TEMIS, IFDMS, GACS, MUSE, etc. It's a work of internal auditor to report on the adequacy and effectiveness of those ICT departments and the other key issues. Okay, next, it is a law of internal auditor to review and report on the implementation of risk management practice quarterly and annually. Now you see, there is an issue of risk management. In most public sector, reports for risk management are not documented, and even some public sector are missing the risk register. Some of them who are having this register, they don't understand how it has been formulated because they contracted an expert from outside the entity. So you have documents, but it's not in practice. Now here, the internal auditor has now a power to audit what are the quarterly reports regarding the risk. Do we have risk register? Now, what are the quarterly reports? Okay. Number K, the internal auditor must submit quarterly internal audit reports to the internal auditor general within 30 days after the end of the respective quarter, after being reviewed by the audit committee and approved by accounting officer. Now, there are three things here. We have the accounting officer, we have audit committee, 3, we have internal auditor general, IG. Now, these three things has been linked. So first, this now functional. The internal auditor is observed by the accounting officer by administratively. Functionally, he is reporting to the audit committee together with internal auditor general. Now, this section has increased independence of internal auditor so that he has a strong power to access 3 organs at a time. L, the internal auditor has a role to submit annual internal audit report to internal auditor general within 30 days after the, okay, this is repeating. Let's see to M. The internal auditor general, the internal auditor has a role to submit risk-based plan to internal auditor general within 30 days before commencement of financial year after being reviewed by the audit committee and approved the accounting officer. So also this one is aimed at increasing the independence of internal auditor. Okay. Now, this law of internal auditor has been documented to have a new regulation so that it can improve its operational and independence. Now let's move first the law of internal audit in risk management in public sector. As I discussed earlier, that we have more public sector missing the risk register, missing the risk management reports, missing the teamwork, and some of them are not having the risk coordinator, risk champion are not there, and some of them who are having the documents, they don't even understand how it works and what to do. So having this law of internal audit in risk management and being empowered by this regulation, this is now regulation 29 sub 2 with GN 798. Now, what are the role of internal auditor in risk management? Number A, the internal auditor has to review the implementation of risk management practice. So the internal auditor is not part of preparer of risk management, but this is the reviewer. So the internal auditor has to review the implementation of risk management practice on a continuous and periodic basis as separated in public sector entity risk management framework. Number 2, the internal auditor, and for the purpose of improving management of risk in public sector entity operations and value addition, a response to requests for audit assistance or advice may be requested by accounting officer. So actually, the two here are the role of internal audit in risk management. Okay. Now, issues for which the internal audit service shall report to internal auditor general has been separated. There are almost two issues where the internal auditor can report to internal auditor general. Number 1, it is audit program, and number 2, it is audit reports. So functionally, the internal audit units has to report to IAG. Functionally, I say number 1 is its audit program. Number 2 is its audit reports. Let us see them. So there are issues from J, K, and I. That regulation for the purpose of duties stated in this JKIA, the internal audit service shall report to internal auditor general. So issue number 1, when the internal auditor general is reviewing the reports on the implementation of risk management, that one must be communicated to internal auditor general. Number 2, in K, when you submit quarterly internal auditor reports. Number L, audit programs. So 3 things that will make the internal auditor general to report directly to the internal auditor general. So internal auditors has to report direct to internal auditor general in 3 issues. Number 1, number 2, and number 3. There has been stipulated by law. So this is functionally to report to internal auditor general, and this has increased the independence of internal auditor. Okay. Now let us go further. Assess and recommendations of internal audit services. Assess and recommendations of internal audit services. That one has been documented in Regulation 29, Sub-Regulation 3. Number 1, the internal auditor can recommend on what issues? Number A, the internal auditor can recommend on strategic and operational decision. Number B, the internal auditor can recommend on promoting appropriate ethics and value within public sector entity. Number C, the internal auditor can recommend on assurance of effective performance of management and accountability. Number D, the internal auditor can recommend on coordination of activities and communication of information among highest government structure, external and internal auditor, and the other assurance providers. So these are the issues. The independence now has been documented of internal general in Regulation 29A. They say that the internal audit services shall be free from interference, intermining the scope of internal audit. Now, how this is in practice? The regulation has provided the definition of the term independence of internal audit services. And regulation 29A is a new regulation that has been inserted saying that the internal audit services shall be free from interference, intermining the scope of internal audit. Now, who can make sure this one is being implemented? Number B, the internal audit services shall operate independently and communicate the results. That's number B. C, the internal audit services shall be granted access to information without limitation. Number D, the internal audit services shall confirm that all instructions are enforced and implemented in respect of the audit services. Number E, the internal audit services shall prepare an audit charter defining its mandate, which shall be reviewed at least one annually and approved by the accounting officer. Now, you are independent, but who is approving? The accounting officer. Also, this one can bring some problem. Why not the audit committee and not accounting officer? So, accounting officer cannot approve something which contravenes his power or her power, and perhaps he is one who is responsible for issue for which the internal audit department is looking for. So let us think twice. If the internal audit services shall report to accounting officer and audit committee and internal auditor general on any challenges experienced during their respective years. Now, how possible the internal auditor report challenges to accounting officer who may be the challenge again? Now, if the challenge is coming to accounting officer, how possible that the internal auditor can report to the accounting officer himself again? So this one also has to be reviewed. Perhaps these challenges, my advice is to be addressed to audit committee or internal auditor general rather than accounting officer. So accounting officer has to be taken out from this power. Okay. Internal control and risk management. So this one has been packed together. Risk management. So that one is regulation 29B. That's a new regulation. So it says that accounting officer or public sector entity shall, for the purpose of ensuring internal control, are adequate to provide reasonable assurance that the public sector entities' risks have been managed effectively. So it's a work of accounting officer to see that the risk management is in place and it is effective. Okay, let's move. Requirement to review the internal control. So this regulation has given a power for internal controls to be reviewed once a year. So regulation 29B subsection 2 saying that an accounting officer shall ensure internal controls are reviewed at least one annually. So this is now very serious. It's not a matter of designing internal control system, but rather as you design, you have to review them to see that in place and even amend some of the controls which seems to be weak. Now, the control components of internal control system consist the control environment, consists the risk management, as you can see here. We have control activities, we have information and communication, and then we have monitoring. Control environments includes ethical and value, includes mission and organizational, and then includes employment skills and performance. It includes authority transfer. On risk management, we have planning and programs, we have determination and evaluation of risk, and from control activities, we have control strategies, determination and documentation, separation of duties, hierarchical controls, and continue activities and information. Similarly, information and communication, we have information, communication, reporting, legislation and filings, reporting errors and irregularities and co-corruption. Monitoring is a evaluation control system and the internal audit. Those are the issues that are expected on a review of internal control from 5 components of internal controls. So, the role of a county officer in risk management, as I said, it is make sure that the risk management has been established and it is in place. So the county officer shall ensure the risk policy or framework is developed and reviewed. So if the CAG comes in, now it is a room for him or her to question if the risk management or framework are not developed, then the county officer is violating regulation 29B. A county officer shall issue a risk coordinator is designated to facilitate identification, recording, and monitoring of risk. As I said earlier, that many public sector has yet appointed the risk coordinator. Or if there is a risk coordinator, the structure, content, and the way is designated is not proper. Because we should have a risk coordinator and a risk champion. From risk champion, we should have the risk register. From risk register, we should have well-documented risk, among them having top 10 risk. So the auditor have to audit on the report of those risks. So we should have risk meetings held by the risk coordinator on a quarterly basis. Now here, that's where a problem may arise. As I said, the risk coordinator is very important. So a county officer must establish the risk policy or risk framework. Number 2, should appoint the coordinator, risk coordinator. Number 3, the county officer shall issue there is a risk register developed and adhered to according to the national guideline. And that risk register has to be updated at least once annually. So people have risk documents that persist for almost 3 to 4 years. It has been even outdated and without being implemented in the public sector in practice. Okay. Number D, the county officer shall issue risk management reports, is prepared quarterly and annually and submitted to the audit committee for review. And the county officer for approval and thereafter to internal auditor general. So the risk management reports has to move from stage to stage, from a county officer to the audit committee, and lastly to the internal auditor general. If you can see this kind of requirement, it may bring the conflict to the public sector, because I'm sure many people are not complying to this requirement. So having this new regulation, we have to work hard. Number E, the county officer shall issue a risk management process is integrated with strategic plan, budget, and operations. You can see some people are missing the strategic plan, but they have prepared the risk management framework and the risk register. So you can ask yourself, how did you prepare the risk register without having a strategic plan? How did you have your budget without strategic plan? So the regulation part E is now insisting that the 3 documents has to be integrated. For example, if I read the risk register, I am going to observe what are the objectives of public sector. It is from the strategic plan we can extract the objective public sector. And it's from the strategic plan we are going to prepare the risk on each objective. It is from the objective we are going to prepare the budgets. This is how you can link the three documents. But currently, these three documents are not integrated together and people are not reporting. For example, if you read the structure content of financial statement public sector, you can see people has documented in area of risk management, mentioning the risk which does not exist even in the risk register, and mentioning the risk which even does not exist in a particular industry or public sector. People are just picking the risk and putting financial statements, and they can't prepare even the TFRS number 1, the director's report or the governance reports. This problem arises because the documents are not integrated as required by this regulation. F, an accounting officer shall ensure that there is established process of monitoring, reviewing, reporting, and enhancing risk management, controls, and governance system. This one is now also a problem. So we ensure that reports on risk has been documented for the internal auditor to review and submit the said report to audit committee and lastly to internal auditor general. Okay, let's continue. What are the relation between internal auditor and the management? We have said this regulation is trying to tell us about the independence. Now, what is the relation between the internal auditors and the management, meaning the accounting officer? From this regulation, it is regulation 29C, subsection 1, that the responsibility of internal auditor for checking and reporting shortcoming in connection with the accounts, finance, and other business operations or public sector entity shall not absolve any public sector entity from responsibility to comply with secular compliance with instructions with the scope of its own authority. Now, we need a vacation. Preventions and detection of fraud. So, the preventions and detection of fraud shall be the responsibility of management. So, the management is to prevent and detect fraud. That is the work of management. And if you see from the audit reports or letter of engagement between the auditor and the management, you can see it is the work of the auditor to audit the internal control system if that internal control system can detect fraud. It's the work of accounting officer to design the internal control system so that it is strong enough to detect and prevent fraud. Now, it's a work of internal audit services to alert opportunities and the weakness of internal control. The internal audit department cannot prevent fraud, but it can alert such fraud to the management according to this regulation. So that is the relation between the internal auditor and the accounting officer forming the management. So the internal auditor is to alert. That's good news. But the management, so when alerting, the internal auditor has a responsibility to document something that the unit see it is a red flag to the management. You document officially and submit it immediately to the audit committee, even to the internal auditor general. Having that report, when the fraud arises, that will form part of defense in court. Okay. So we are saying, what is the role of internal audit in a flood? So the internal audit unit has to alert the management on issues relating to flood. You recommend something to alert it. A management has to take collective action to prevent that flood after getting information from the internal audit units. Now, if it happens there is a flood and the internal auditor has no report to alert the management, that one may become also a conflicting issues. So from this regulation 29C part 8 say that the internal audit services shall actively evaluate the potential for the occurrence of flood and how the management shall manage them. You see now, we are professional, we are consultants, we are trained, we are having a mindset, we're having a knowledge in any capacity to understand how flood can arise and alert the management. Number B, the internal audit services shall support the management's effort to establish ethical culture. So we have been given a power to recommend on the ethical culture within a public sector entity. Number C, the internal audit services shall evaluate internal control used to prevent, detect, and mitigate the flood. Remember, the one to design the control is the county officer. We have been given a power to evaluate it. It's efficient, detect, prevent, and mitigate the floods. D, the internal audit services shall be involved in internal public sector entity flood investigation. So once there is a flood, we are now there to stay, becoming an expert, becoming working a police work, at least to have investigative mindset, to go internally, to be skeptic to see how this fraud has been formulated. Now, the role of internal auditor general, not internal auditors, the IAG, has been formulated with regulation 29D. That one is a new regulation, giving a power to the internal auditor general. He said, in order to ensure that the adequate and consistency of standard of internal audit are applied throughout the government, the internal auditor general shall be responsible for ensuring that the status and the power of internal audit function in the public sector entity conform to internationally accepted standard and procedure. So this person will ensure all the internal audit services with the public sector conform to international accepted standards and procedure. So it's this, if you can say, this person has a power to formulate national standards regarding internal audit operations. That's how it works. Now, the power of internal auditor general, that has been stated in regulation 29(2). The internal auditor shall have a power to issue instructions regarding internationally known standards. You see, so has a power to issue standards on audit. Number 2, the internal auditor general shall have a power to inspect the internal control system, the risk management, the governance, and the audit function instituted by the county officer. That one has increased the independence of internal audit units. So in this regards, the internal auditor general will have a power to inspect the county officer on the issue regarding the internal audit departments. As you see from different audit reports issued by the CAG, he documented some issue relating to weakness of internal audits and even narrating its independence were not there. Now, from this paragraph, I'm sure it may assist to eliminate those queries. C. The Internal Auditor General shall have a power to ensure that instructions issued are implemented. Instructions issued are implemented. So we are expecting to have circular from Internal Auditor General regarding the operation of internal audit services within the public sector. Number D. The Internal Auditor General shall have a power to conduct external assessment of quality assurance and improve the programs. Those are the power. There are almost 5 powers of Internal Auditor General under this regulation. Previously and formerly, we had no these powers, at least to go. We are now documented with laws. Now, a very important thing here is establishment of audit committee. That one has been centered to Regulation 30, Subregulation 1 of GN 798. So here it is stated that actually there shall be an each public sector entity other than the entity whose governance law provide for establishment of audit committee, a committee known as audit committee, which shall compose 5 members. Now the committee shall compose 5 members. Now what are the composition of audit committee? That one is challenging. So the audit committee shall compose of 5 members. Now let's see part A. 4 senior members from outside the reporting public sector entity who shall be appointed by county officer. So the county officer shall appoint 5 members who are coming outside the reporting entity. B. 1 senior member appointed by permanent secretary from outside the reporting public sector entity who shall be a chairperson. So there are 5 members of audit committee, 1 being the chairman, and the chairman shall be appointed by the permanent secretary treasurer, PST. I mean. So now here, this is where changes are coming. Number 1, all the member of audit committee must be coming outside from the reporting entity. Number 2, the chairperson must be appointed by the permanent secretary treasurer. So what are the requirements? There shall be 5 members for each audit committee. That's good news. Number 2, all 5 members shall be appointed outside of reporting entity. Number 3, 4 members shall be appointed by the county officer. That's good news. But the chairman has to be appointed by the permanent secretary. So these 4 key issues, there must be new issues to be observed efficiently and even carefully. So we have many audit committees who are not in line with this requirement. So it's a time for us to make sure we can see that. Now, key qualification. What are the qualifications of the member of audit committee? Now, Regulation 30, Section 2, it says that member of audit committee shall be a senior person who have the following key qualifications. Number 1, a knowledge and experience in finance, accounting, or audit. Number 2, knowledge and experience in risk management. Number 3, knowledge and experience in technology and legal expert. Number 4, knowledge and experience in industry expertise. So these are either of may form an audit committee. So at least if you are a legal advisor, at least somebody who knows finance, and that will become the chairman, or somebody who has risk management in the other case. Those are the issues that we are expecting to have been followed. Now, appointment of the secretary of audit committee. Who appoints the secretary of audit committee? A secretary of audit committee is not a member of audit committee, but a secretary. Now, who appoints him? So Regulation 30, subsection 3, saying that the accounting officer shall appoint a senior officer within a public sector entity to be the secretary of the audit committee. So the secretary is not a member of the audit committee, but somebody who is very senior within a public sector and must be appointed by the accounting officer. So I think we have done. So as we continue here, function of audit committee is very usual. We have different function of audit committee. That one's not new to you, but yes. So only this function that become the end of this presentation. But in line with this, I wanted to put something more sensitive. As we discussed earlier, that the internal auditor shall be a professional. Now, NBA has established this course. This course is known as Diploma in Internal Audit. So my advice to all accountants, let us make sure we adhere to this requirement. So we can adhere to this requirement by applying this course. This is a first seat. So this form I have downloaded for you. You can fill it at any time. Put your particulars and pay the control number, ZS 25 shillings for application form, and then wait for admission. The requirements, all accountants have a qualification to apply for this course. So my advice is for you to comply with this session and make sure you attend the course in this establishment. So it's a virtual course. Classes are conducted online, and these are targeted groups. As you can see them, the targeted groups is me and you. So don't miss. Targeted groups is audit staff, all who are involved in auditing public, private, trainers wishing to acquire knowledge, concerned and dealing with this one, accountants, and others. Entry qualification are here, and there are 2 levels. It is conducted in Dodoma, and the examination in Dodoma and Dar es Salaam. And the fee, this is the structure of the fee, which are manageable. And it's a time for we accountants to adhere to these regulations. So, having said that, I'm sure you can now see and make it follow. Thank you for